Hey guys, it's Barry, your credit coach with your credit toolbox, and I want to talk about forbearances and the CARES Act that just came out. Okay, first off, understand that the CARES Act is designed, and the mortgage part of it is designed to work with government-backed loans. Okay, government-backed loans are ones that are FHA loans, they're VA loans, they're USDA loans, they're Freddie Mac and Fannie Mae, all those type loans, all the ones that the federal government said, hey, I'll back this person in order for you to get the loan. Okay. Also understand this, that a forbearance is nothing more than a reduction in the payment or a suspension of the payment for a time period. Okay, it does not do away with the debt. It does not do away with 3 or 4 payments. Okay, you're still going to have to pay the missed payments back at the end of the term. Usually what happens is they're going to put it at the end of the mortgage. Okay, now they can do that several different ways, and I'll cover that in a few minutes. But you want to make sure you know what you're getting into before you do that. Also, the CARES Act allows you basically to temporarily to suspend your payments if you're experiencing financial difficulty due to the coronavirus. What it does is it gives you the right to request forbearance up to 180 days. Okay, it gives you the right to request. Okay, they're going to give it to you, but you have to request it. Okay, it also gives you the right to request an extension if you need it after that 180 days is up for an additional 180 days. I'm sorry. You must contact your loan servicer to request a forbearance. It's not something they're just going to do for you. The federal government's not going to contact all the servicers out there and say, hey, if it's a Fannie Mae loan or Freddie Mac loan or FHA loan or VA or whatever it is, just go ahead and suspend the payments for 3 months and tack it on the end for them. That's not the way it works. You have to talk to them, and you have to understand what they're going to do for you. And I would make sure you get it in writing and make sure you fully understand it, because they can do it one of 2 ways. They can, or 3 ways really. They can put it at the end of the term in one lump sum. Okay, they can put it at the end of the term where you're going to keep paying the payments, or after the 180 days is over, they could put it in your payments, and it might raise your other payments by $500 a month. Well, if that's not something you can afford, you might have to work out a different agreement with them than that. So make sure, number one, that you're in full understanding of what it is that you're going to do on the forbearance, and make sure that you get in writing, get them to email it to you. Okay, and the other thing is the calls are going to be long. You're going to have to sit on the phone for a while. Okay, if you can't reach them by phone, then I'm going to put a template at the end of at the bottom of this in the comments of this YouTube post, or in Facebook on your credit toolbox. You can find the template in there also. It's all free. Just send it to them and get it worked out for you. But do it now. Act now.